Global payments accounted for 44% of global blockchain revenue in 2022, and by 2030, blockchain revenue is expected to reach $1.4 trillion worldwide. I spoke to Mark Smargon for more on how blockchain technology is revolutionizing the payment space.
Our view of the payments industry is really global. We look at how those business models work in the developing world and how those things work in the developed world, and they couldn't be more different. In the developed world, there's a lot of Visa credit card penetration. There's a lot of cash usage. You still have about half of the POS sales, point of sale sales in Europe are still cash-based. You can see more and more solutions that are building on top of Visa, but in general, you see less and less I would say, the people understand that plastic cards are not the future. And in the developing world, in Southeast Asia, Latin America, in Africa, there's no Visa. We see people leapfrogged straight into mobile payments. We see this in, especially since Corona, in a lot of places where people want to use less cash. So this is basically what is happening in places like Africa, where people have smartphones and they want to use their smartphones to pay. And the infrastructure, the banking system is already suited to provide this. And the one very unique aspect of Africa is that there's much less local banking, and there's a lot more P2P payments, and there's a lot more, I think, demand for solutions that are blockchain-based, because they really allow you to take, bank-grade infrastructure and deploy it at scale without huge costs, without risk management, without expensive underwriting, and without many bank intermediaries. So I think this infrastructure is very needed, but it's also completely different than what can be deployed at scale in the West at this point.
Quite interesting. And Max, of course, there are challenges and there are opportunities. What areas are you seeing significant challenges in Africa when you look at blockchain gaining more acceptance?
I think blockchain is a very general term. I don't think there's such thing as blockchain acceptance. Blockchain is a technology, and the fact that we're talking about a technology means that it's early. When technology gets traction, when it's getting a lot of adoption, nobody really cares about the technology anymore. It's hidden underneath the surface. I don't think in the future users will care if a local operator is using a blockchain behind the scenes or using some other solution. I also think the term blockchain is very general. It's just a way to describe decentralized databases or distributed databases. And I think for financial use cases, when we see more sophisticated financial products in the market, when we'll see more robust business models that are not basically based around Visa or based around one entity that manages all the information, manages all the data, like Stripe in the US. So we look at blockchain as a way to achieve more competition, and we use blockchain to achieve better business models enabled by technology. And I think that this is a profound change. It's very grassroots change, and it takes time to create this standardization, create this adoption. So the challenge is not necessarily with the blockchain technology itself. It's just a challenge with the disruption that this new technology introduces and the new models that it enables. And now what we are doing, we're in the process of validating those models and getting traction with local operators in Africa that are basically looking to use this technology as a means to an end. Remember, blockchain is not the objective. Blockchain is just a means to an end. So what do we want to achieve through blockchain technology? We want to get people products that are not necessarily for investment, not necessarily only for investors. We want to facilitate P2P payments, B2B payments, merchants that want to accept funds through online marketplaces, through offline marketplaces, through wallet apps that are very, very popular nowadays. With more and more smartphone penetration in Africa, you get more demand for customers to use their cash, to invest their cash, but also some of them don't want to invest it. They want to, save it for a rainy day, and they need a savings program that can give them, maybe exposure to dollar. Maybe they want to pay with points that their business is giving them. Maybe those businesses want to reward customers. Maybe we want to build products that are around specific communities, around specific retailers. The list goes on, and I think focusing with this technology on the long tail really brings the benefits of what this technology can give us. And then I expect, or I predict, that people will hear less and less and less the word blockchain, and will just see what this technology enables, and it would be less about the technology and more about what it enables.
Interesting. And Max, as we wrap it up, of course, we cannot just close off this conversation without getting your insights when you're looking at what are your expansion plans across Africa. And of course, you also have been nominated for a global award. Just give us more perspectives into this.
So first of all, I think that Africa is in an inflection point right now, where there's signs that we see more and more mobile-based solutions that work with integration with banking. And I think that moving forward, we will start seeing a lot more interesting stuff